afternoon, everyone, and welcome to Stock Market Today. Ali Quorum and Justin Nielsen here with a breakdown of the action in today's session. A strong gain, the NASDAQ leading among the three major indexes. We'll get into the technical action here in a sec. And Justin, we've had all of this taper talk, and it seems like that finally came to fruition today.
Well, it's like we finally put it behind us a little bit. You know, the will they or won't they? When will it happen? And I think the fact that the Fed didn't do any surprises was a big thing. But we'll get to that in a second. Just to kind of give a preview of what we'll talk about. We're going to revisit Academy Sports and Outdoor that Ed talked about yesterday. We could probably take a look at some of the stocks we've been talking about this whole week, because it seems like everything we've been talking about has been going up. That's the benefit of a good market. Element Solutions was our stock of the day, so we'll get into that a little bit, and then also end with Bunge in the agriculture space.
Okay, well, the market is going up, but is it too good now? Is the question, Justin.
That's the question,
with the NASDAQ,
right.
Yeah, gaining another 1% today. Small caps, another big day. After a notable move on Monday, small caps up 1.8% today. The S&P 500 up about 0.7%, and the Dow up 0.3%. So the NASDAQ up now 8 days in a row and over 5% above the 50-day line. Should we be concerned at these levels, or do we have a little bit more room, do you think?
Well, this is where it depends on your time frame. And just so people know, as strong as this day looks, this isn't actually even updated to the close, because we were rallying into the close. And so it was up actually over 1%. So yes, this does start to look a little extended here. Now, if you're a position trading, if you're a position trader and you're like going for the bigger moves for longer periods of time, then this is not something that you're concerned about, because look, this is just strength. This is what you want to see after a follow through day, and the market is delivering that. If you're more of a short-term trader, you know what? This is a time where you should expect a little bit of a pullback, and that's normal thing. Even a pause here just lets the moving averages catch up a little bit. So that's actually constructive action. So if you're able to hold through that, stomach that, it's no problem. As a position trader, you can kind of go ahead. If you've been selling into strength, this could give you an opportunity to maybe pick up some shares with some sideways action, or even a pullback in some new names, or a place to add to some positions that you're trimming a little bit, but keeping the core holding.
Right. And a look at the QQQ ETF, which tracks the NASDAQ 100. This is now about 5.5% above its 50-day line. And our Chief Content Officer, Chris Gessel, noting that at the 7% mark, that's typically when we are the most likely to see pullbacks, but they can also happen at that 6% mark. So I guess just further evidence that maybe it is time for that little bit of rest that you mentioned, Justin.
Well, and again, what Chris Gessel, our Chief Content Officer, is looking at there is, just historically, where do we typically go to before we, pull back a little bit? And that's 6%, 7%. That's where the most instances are. There are cases where you go up more. And so it's not necessarily that you're going to just sell automatically when you hit those levels. Sometimes what we do is we look for a reversal, a downside reversal where you start going into new highs, but then you close weak. That's not what we've been seeing so far. We've been seeing a lot of strong action, except for the one stalling day that we had, a few days ago. Everything has been looking pretty rosy here, and so until you start seeing that weakness, and you might even be able to see that intraday. Things are still going well, and now that we have the Fed taper talk kind of behind us and a little bit of clarity there, we could have some further room to run.
Well, great things to keep in mind there. And with the Fed in focus, let's just take a quick look at KRE to see a strong day in regional bank stocks, with KRE up about 2.9%. So some definite outperformance here, Justin. And the swing trader has been all over this trade.
Yeah, and we talked about this on the Stock Market Today video on Monday. And the premise here is, look, the Fed has been very transparent about their taper plans. And so the fact that this came about, it did push the 10-year treasury up a little bit. If you're in MarketSmith, you can put in 0TNX. That gives you the 10-year treasury yield. Keep in mind the yield goes inverse to the bond prices. So we are seeing an increase in the yield lately, and today, especially after the Fed announcement, we saw it push back up to 1.6%. So yeah, that's going to benefit generally the KRE thesis, for regional banks, especially if that spread between the shorter term and longer term rates gets wider. That's where they're going to be making better profits because they're going to be using that spread to their advantage.
Yeah, and small caps that's another story that we've been
Yes.
tracking this week. So the Russell 2000, which is tracked by the IWM ETF, up 1.8% today, and this comes on the heels of a strong day on Monday as well, with a gain of about 2.6%. So a huge week for small caps right now.
Yeah, and that's why we were talking about it on Monday, right? We saw this action, and what's important to note, and this is something we were talking about on IBD Live today, maybe just go to the weekly chart on IWM real quick, and you can kind of see that there have been these critical turning points. It doesn't show on this chart, but if you go back to like 2016, when the presidential election with Trump, that was a big shift in the economy and the prospects and stuff. So we did see a big move in the Russell cap 2000, small cap 2000 at that point. We had this kind of flat area. We saw another move in this latest presidential election. I would argue that the vaccine day on November 9th was probably an even more important catalyst for the Russell 2000 at that point. And here we are after basing again. Look, with Delta variant getting a little bit more under control, with reopening, possibly getting back on track after getting a little bit off track with Delta, this could be that new economic thrust that is being foreseen here, because the Russell 2000 does tend to be the one that reacts most to those economic changes.
Well, taking a look underneath the surface today, it seemed like one of the themes that we were watching today was that of the retail sector.
Yeah.
A number of retail stocks really on the move, including Academy Sports and Outdoor, ASO, a stock that we've been following since its IPO debut and the recent setup with the handle. Ed and I talked about it earlier this week, and it broke out in a big way today, Justin.
Yeah, so this is something you actually mentioned it. I think on Monday during IBD Live, you and Ed talked about it yesterday. It just had a really nice setup, and so the benefit of being able to do your homework, even if you didn't buy it yesterday, there was really no volume behind it or anything like that. But today, it really started moving. Now, part of the catalyst might have been this partnership between Dick's Sporting Goods and Nike. That was certainly sending Dick's higher, DKS, but the ASO, I don't know if it was going in sympathy or what, but the fact is this was showing a clear breakout. It was, whether you do the downtrend of the entire base or the downtrend in the handle, or you wait for that just straight high of the handle, no matter how you slice it, this was a breakout, and that volume was very powerful behind it. So that's a good sign. And again, the more you see these stocks doing this kind of action and working, following up, that's what you want to see in a strong market.
And also, Justin, just a quick follow-up on Macys, which you and I talked about, the ascending base on Monday. So Macys has had a very strong week, tacking on another gain of 7% today. So it's up about 15% for the week and showing that outperformance with that RS line blue dot.
Absolutely. And not to mention, this is one of those groups that has been one of the most powerful groups. And it was a big surprise. Again, this is why sometimes you have to leave your opinions at the door and just go with the facts. The fact is, department stores have been doing a big rise. And Macys been talking about having some of their supply chain issues a little bit under control. We talked about that on Monday, and that ascending base. And also, just for those of you that have your orange cover, How to Make Money in Stocks book at home, or maybe the green cover, the 4th edition. In either case, take a look at Redmond Industries. I was talking about that, I think on Monday, but also this morning as a good precedent for the ascending base that we're seeing, because it just came right after another base.
Yes, you did, Justin. Okay, moving on. And let's analyze the chart for Element Solutions, ticker ESI, in the specialty chemicals group, up almost 4% today, double volume. Now, Justin, A lot of volume has been coming
Yeah.
into this stock since its earnings report. A big move up yesterday, and the team hat tip to Chris Gessel for this one when it was up just in the first half hour of trade. We were taking a look at this stock.
Yes, and it became the stock of the day. So Jillian Rich wrote an article on this, kind of letting you know a little bit about what is the story behind this. Because you look at chemicals specialty, like that doesn't, what does that tell you? But they're doing a lot of different things. From the grills in Ford trucks to all sorts of different chemical elements in a lot of products that we're using. And look, supply chains are still an issue here for a lot of a lot of the products that they're dealing with, and they see those supply chain issues continuing to Q4. But this is something that you see a lot of volume coming behind the moves, and that just lets you know, look, this is, as Bill used to say, this is not your Aunt Sue down the street buying shares. This is the big institutions trying to get a position in this stock or adding to a position that they already have. So I think there were some really clear volume clues yesterday, and it followed up today. Personally, I prefer the buy yesterday, but when you get the breakout, if that's what you're waiting for, you certainly got that follow-up action with volume continuing to be heavy. So that's just a lot of spikes in volume, and you have to pay attention when you see that because it really is telling you something.
Yes, notable move today for sure. And last on our list, we have Bunge. We have ticker BG, an upside reversal here coming down to the 10-day line, which coincided with that nice round price level of 90, Justin.
Yeah, and it got support right there. So now this is one that it's really run up quite a bit from the bottom of this base to the highs, back into new high ground, and then pulled back a little bit. But it just seemed like agricultural operations. This is something that I was seeing a few stocks set up in. Darling Ingredients was another one in the group DAR. But you got to still look for these setups because we're talking often a lot about these stocks that are breaking out or the ones that are moving, the ones that are working. But in order to capture these yourself, you really have to do that prep work. So I think this is one that's set up, and the reversal today looked very good to me and very appealing. And here we go. A big spike in volume on this one as well.
Exactly. Okay, Justin. So a question for you as we wrap up, because we're talking about reversals off of the 10-day and breakouts here. So does that also note a sort of a shift in the market tone that we've seen? Because all year we've been talking about these little rotations, and you better get those early entries, low risk entries, because you could get shaken out. It feels like if perhaps some of these breakouts really stick, maybe that does indicate the higher chance of a strong finish to the year. What do you think?
And this is where you use the market as your feedback mechanism. When the breakouts aren't working, that's telling you something. And if the early entries are, that's very indicative of a market in sector rotation that's happening. And that's what we've been seeing most of the year. But now it seems like a lot of sectors are participating. There's a lot of strength across the board. A lot of the indexes are participating instead of what was happening earlier this year where the NASDAQ was flattening out and the S&P 500 was making new highs, or you only had the NASDAQ being driven by Google and Microsoft and those big $1 trillion club members. That just wasn't giving you a lot of participation, a lot of things to work with. It just seems like there is more breadth now. All of the indexes seem to be rowing in the same direction, and you've got the Russell 2000 participating, as we mentioned. So that right now the market feedback is saying that, hey, there is a difference here. Now, if you start seeing these failures, that's going to kind of tell you, oh, it's back to business as usual.
Yeah, we're going to remain flexible. This could be shifted the tone, or it could all change tomorrow. So that's why we'll always stay on the edge of our seats and keep you updated in the many various ways that we are able to, whether it's the Investing with IBD podcast, IBD Live, our daily articles, or this show, and so much more. So a lot of ways for our audience to be able to stay in step with the market.
Absolutely.
All right. Thanks so much, Justin. And thank you all for tuning in. We will be back tomorrow morning with more on IBD Live. So we hope you join us, investors.com/IBD Live for that. And the podcast dropping tomorrow at investors.com/podcast. So keep an eye out for that as well. Thanks, everyone. We'll see you tomorrow.